Hi guys, welcome back to another important video. This is the PTM Indicator Intraday Guide video series. In this guide, I'm going to talk about all the details you need to know about the PTM indicator, what its theory is, why did I create this indicator, what it will do to us, how to create an algo using this indicator. Yes, it is fully compatible with algos. How can we understand and create strategies using these signals we see in the screen? What are the signals? Everything I'll tell you in detail. Before that, let me just remind you that this entire indicator, this guide video, is only for those traders, those researchers, those learners who are serious about learning trading as a business. It means simply means you require capital. I've said this so many times, I'll remind it to you in the beginning of the video itself. You can choose whether you want to learn trading as a business or you just want to skip this video. That's up to you. I've told that for a part-time business, trading business, you need nearly 3 to 5 lakh rupees in today's market. If you are full time in the markets, you need 10 lakh rupees to create a system which is sustainable. You can repeat through many years. It's the same thing, right? You cannot ask Mr. Anand Mahindra or Reliance chairman Mr. Ambani that take 50,000 and create a big company. Create 1 lakh company using, let's create, you can't tell Mr. Anand Mahindra build a car using 10 lakh rupees. He requires all the capital to run the business, the entire supply chain. That's the same thing with trading. If you want to learn trading as a business, this video is for you. We are going to talk about systematic rule based approach and what is the logic behind it. Now, first thing, how do we apply the indicator to your charts? I'll just remove this indicator first right now. And we have a blank screen. All these lines are nothing but your end of day lines. All right. So what you need to do once you get the access, to the indicator, go to the indicators tab. Here I have highlighted it for you. Go to the indicators tab. Then you have to click on invite only scripts. Click on the script. This part here, you will see that there are two scripts here. One is your PTM indicator 3 minute, 4 minute, 5 minutes. So those who have subscribed for PTM indicator intraday, you will have this script in your indicators tab. Inside your invite only, you will have this. And those who are subscribed for the indicator, PTM indicator, swing indicator, you will have this one also. So first thing you must do, click on the intraday chart. That is your intraday indicator. It will get applied to your chart. Now you've done that. The last simple setup. What is these agro bull? What is a bull? Bear? I'll explain all that in detail. Before that, one important point is go back to this indicator here. Go to the settings. Click on these three dots. Go to the visual order and click bring to the front. Why am I doing this? Because we are going to highlight the bars. How are we going to do that? Very simple. Go to the indicator settings. You see that in the settings we have safe bull color. This is a safe mode. There are two modes, safe mode and aggressive mode. Say this is your aggressive mode, safe mode. I'll explain what it means, but for now just understand this. Safe mode and aggressive mode, we have to put aggressive mode bull color, bear color, candle color. The safe mode bull color and bear color. What I'm going to do right now, I'll change some colors. You can simply copy paste them or just do the same thing I'm doing, or you can change it as per your wish. That is entirely your choice. So what I'm going to do right now is I'm going to change the safe mode first. All right, the safe mode, what I'm going to do is I'm going to make them yellow. I'll make them yellow, both the color candles. I'll make them yellow. Right now here I'll zoom in and show you that this candle is yellow, but I have a white background. I want to make more customizations like changing the wick color, changing the border also. Same thing, go to the settings and you have something called style. All right, go to the style part. I've changed the wick color to black. as per my choice. Again, now look at the candle. It looks very neat and clean, and also it is clearly visible to the eye. Same thing I'll do for the agro bull and bear, right? Agro bull, let me put some light green color. Okay, and agro bear, some light red color. All this is actually irrelevant. You can do it in your spare time, but I just have to make this clear because I get so many questions about, sir, I can't see the candle, I can't do this. These are some things which you must understand clearly. Done. So now my agro bear, where the market had fallen beautifully here, it has a different color. The signal candle has a different color, boundary and wick. This is the basics. When we apply the indicator on the charts, you have to do these changes so that you will not face any trouble later on. Now we have finished the basic setup. What I want to tell you about the PTM indicator is very, very simple. It's a basic concept. Learn the meaning of PTM indicator first. PTM stands for price time mapping. All right, this is my research and my invention. This is something which I don't talk about in the public space. So far, that full form is more than enough. We combine some price analysis and some time analysis to make the calculations to get the signals. All right, now what is the purpose of this indicator? So for any business, you need a process. In the business of trading, it's very simple. You bring capital, you apply that capital to the trading process, and then you get the output, which is your ROI. That is your return on investment. Simple. Same thing. Let's break down this block of trading process. Trading process has three major parts. I've repeated this so many times in my weekly analysis videos. I'll tell you again. It is market structure plus your edge or whatever research tool you use plus your trading strategy. So applying all these three things is equal to your trading process. Simple. Now, what is the weightage of each? We know the formula. What is the weightage? Your market structure is 70% important. You need to study 70% market structure. 20% is your edge or research tool. Your 10% is your strategy. Now, the most common mistake here people will not understand is that why only 10% for your trading strategy. I'll tell you the reason. That is the most simplest, easiest part. It is just execution. Trading strategy is just execution. You don't have to think so much about it. The price action part, the market structure is the most important. Why? Why is it the most important for the trading business? Simple. There are two kinds of price actions which are very common and which forms the base of any algo strategy, of any strategy in the market. First one is called continuation price patterns. The next one is called your mean reversion price patterns. This is one of the most common ways an retailer can build his trading business, his or her. But your institutions have other methods like arbitrage, and they hedge currencies, they cross assets, they trade. Right? Retailers don't have that kind of facility or the money power to do that. So far, it should be clear that there are two types of price patterns. This is why you study market structure to identify any one pattern. Then you apply your edge in the market to find an entry point. Then, as soon as you find the entry point, your trading strategy is just the execution part. Clear? So far, the trading process has to be clear. Now, we'll talk about little more in detail about our PTM indicator. If you see, the PTM indicator itself has two modes called, one is the safe mode, one is the aggro mode. Aggro mode is nothing but your aggressive mode. If you see in the settings, here we have the aggro mode and this is the safe mode. Now each mode has a bull signal, bear signal, and then you have the option of alerts. So whenever the signal comes, an alert will come. I'll teach you how to place the alerts. I'll teach you how to make an algo also. Don't worry. So far, this should be clear. Aggro mode, that is nothing but your aggressive mode. It has a bull candle, a bear candle, alerts, and we have something called the candle high low. Now candle high low is nothing but whenever a signal gets generated. Let me show you here. You see the signal? I'll show it to you. Very simple. So when this signal gets generated, I'll go back, I'll go live. This is one of the features of TradingView, a very good feature. You can go and show the history. So we'll show, okay, so this is one candle which signal got generated after the candle closed. Simple. And immediately you will see a level which is nothing but the candle high, which I call the high low level. Now this high low level is used for SL. It can be used for entry. It can be used for different kinds of strategies, but its main use will come for SL, stop losses. This is what I use it for. All right. I can code it. I can simply connect it with an algorithm also as an exit strategy. I'll teach everything about algos in another guide video. Don't worry. So far, we're just learning what is the PTM indicator. Now, what is the purpose of these safe algos, sorry, your safe mode and the aggressive mode? Very simple. Your safe mode is related mainly with your continuation patterns. All right. Your aggressive mode is related more with your mean reversion patterns. So go back to the formula which I told you, market structure plus edge plus your trading strategy. Your PTM indicator is the edge, and also that is a research tool which will bypass the market structure. So 70% market structure weightage, I don't have to study. I don't have to study that much price action. My work will be very simple. The PTM indicator itself will study the market structure with price and time. Then it will tell me there is a safe mode, that is nothing but your bull signal, which is nothing but your continuation pattern. So what strategy should I execute? Very simple approach, right? Same thing if I get an aggressive aggro bear or bull signal. This is an aggressive setup. What is your strategy? That's all. That's it. That is my simple setup. Now, how do you decide a trading strategy? I'll tell you all that. What is money management? I'll tell you all that. So far, it should be very clear that this is the process. Now, what we're going to do is we are going to move on, and let us take a small example of a strategy. Before we go into the strategy part, I'll just talk about time frame. There are three different time frames for the intraday. There is the 3-minute chart, the 4-minute chart, and 5-minute chart. The 3-minute chart has a lot of noise. It is for personalities who prefer many signals. They don't really worry about catching the move late on, because 4-minute and 5-minute usually has some delay in the move. Candle forms different. All right. So yes, there will be difference in signal candles, number of signal candles per day, but towards the month end, it will all be the same. All right. Now 5-minute chart, you will notice that they have very less number of candle signals because of the noise is reduced compared to the 3-minute chart. My personal preference is the 4-minute chart. I prefer the 4-minute chart because it is a balance between both 3-minute and 5-minute chart. And also TradingView has made the 4-minute chart as a paid feature. It is not available in the free feature. It is in a paid feature. Why? I don't know. Someone must have told them that 4-minute chart is very, very important. Don't give it to everyone. All right. Anyway, point here is that this is my preference, 4-minute chart, and you can obviously do and select your own chart preference. I will tell you how to do forward testing using algos. That time I'll tell you more in detail about time frames. Right now, we understood so far why are we using the PTM indicator: to bypass market structure and directly go to executing a strategy based on the signal generated. All right. Now, let's talk about a simple strategy. Simple as possible. What I want to do for a strategy is that when the market is trending, I want to make some money. All right. When the market signal has generated and it is trending, I want to make some money. And when the market generates the signal, but sometimes the market goes sideways, right? I still want to make money. For example, I'll just show you an example here. You see this part, this one? Market triggered a signal. Market went sideways the entire day. And then at the end of the day, it gave you some profit. Now, question is, what kind of strategy will help me in both sideways market and trending market? Which strategy is that? It's very simple. It's a spread. Option strategy, spread, credit or debit spread. Credit spread, I think everyone knows it. Debit spread also you should know. If you are here watching this video and want to learn trading as a business, credit spreads are nothing but shorting call options or put options. You short near call options or put options near, and then you buy call options and put options which are far. This is nothing but your hedge part. This is your main part. This will also reduce your margin required for the day. Intraday margin will be required if you trigger this kind of strategies. Debit spread is the exact opposite. You buy the near one, you short the far further away one. All right, this is the debit spread. What I prefer is credit spreads, and I will talk about credit spreads throughout this video. I hope it's comfortable with you, because this is one of the most basic strategies out there. You can make your own strategies. I am only giving an example throughout this guide videos because I want to code that. I want to make the same strategy into the algo. The best part about spreads is that they are repeatable. Most important point, for any strategy, it can be repeated 100 times. Then it is very simple to understand. Also, it can be scalable. So today, suppose I told you for a part-time business, you need 5 lakh capital. Tomorrow, when I grow my business and it has become very successful and I have a 50 lakh capital, I can do the same strategy again. So it is scalable. All right. So credit spreads are very, very important. It forms the building block of any modern day option strategy. All right. Keep that in mind and we will talk about the strategy further. Now, understanding a strategy, a credit spread strategy is very simple. I'll give you a direct example. I don't want to beat around the bush. I'll tell you the same one which I am planning to use for my algo. This is an example of an aggro bear. This is an aggressive bear. First, before I deploy a strategy, I must understand how much capital I have. So, like I'll repeat again, for a part-time business, I expect you to have a capital of 3 to 5 lakh if you're part-time in the market. If you're a full-time business, trading business, I expect you to have a capital of 10 lakh. Now, question is, how do I distribute the capital? For example, I have two modes, which is your safe mode and your aggressive mode, which is your aggro, right? So my capital can be deployed on both if I have the equal amount. For example, I have 5 lakh. I can deploy 2.5 on this and 2.5 on this. All right. This is a simple method. What do I prefer? Now, this I've told you a general idea. What is my preference is that I prefer to keep, for safe mode, I keep 5 lakh. And for aggressive mode, I prefer to keep 5 lakh. Now, many of you will have seen you will see the PTM Swing Indicator where I've told you can keep 5 lakh intraday and 5 lakh for your positional, for the full time, right? Those who are full time trading in this business, you can do that, right? So in this case, what I prefer is I start with your safe mode, 5 lakh safe mode, grow the capital, let it take its time, grow the capital. When I have 10 lakh spare, I will split this into safe and aggressive both. So basically it means aggressive mode will unlock if I have extra 5 lakh capital. Start with safe 5 lakh, put 5 lakh for positional, 5 lakh for intra, 5 lakh positional manual or algo, but I prefer manual. Intraday 5 lakh, I'll switch to algo so I don't have to focus my head on two areas. I'll focus on this every day. I will monitor the algo every day. How do you create the algo? Like I said, I'll teach you everything from the scratch. Simple. So far, this is how money is split. Now let's get into the strategy. I'll explain how SLs are decided, how what kind of SLs can you keep. First, in this case, I'll give you a direct example. We'll go to a simulator and I'll show you how to do it. Here I have, this is the 11th of March and a 9:35 candle. A 9:35 candle, I'm using a 4-minute chart. Like I told you, this is my preferred time frame. 9:35 candle, the low is, let me just mark it, 24,180. So 24,180, let me take a round figure of 24,200. Correct? So as soon as this candle is triggered, as soon as I get the signal, what I'm going to do is, it is a bear signal. So I have to create a bearish credit spread. So bearish credit spread, how? You have to sell call option near call option, and then far away call option I have to buy. Very simple. I'm just giving you, I'm spoon feeding you everything here. Now, what is the strike price selection? There is no rule for strike price selection. Everyone has their own choice. Everyone in your testing phase, when you have 1 month free trial, you can test everything you want. So what I want to do is, I usually take 200 points away. 200 points away. This is nothing but your upside, right? 24,400. So plus 200 points away. 24,400. Your call option, 24,400 call option. I will short, then 400 points away, plus 400 from the center. Okay, 400 points away, call option 24,600. I will buy. Simple. Let me just put it on the simulator. Right now, this is your 9:35 candle. So this is a 5-minute, sorry, this is a 4-minute chart. So this candle will close at 9:39. And this is when this signal will get triggered. All right. So far, everything has to be clear. How I take strike selection, very simple. You can change it. You can use delta basis. You can check premium basis. That is up to you in your testing phase. You can decide all that. All right. So 9:39, I have to put it in the simulator and I have to select 24,400, 24,600. Done. Let's go to the simulator. When this is your 11th March, correct? 9:39. Okay, 9 o'clock. I'm using stock mock simulator mode. You can also use it. It's very good for back testing and manual testing. Here done, and then I'm going for 24,400 short and 24,600 buy. I use approximately 5 lots on every trade. So if you see my capital, it comes around 2.69. Right. So I have a total capital allotted for this portfolio. For what portfolio? For any one portfolio, aggressive mode and your, so we have your aggressive mode and safe mode. Right. I have a capital of 10 lakh. I have split it into 5 split. And at the moment in single trade, I'm using 2.69. On expiry days, on Tuesdays, on your weekly expiry days, this becomes 3.4 or something like that. Because of the expiry day margin requirements, this will become 3.4. Remaining money is just for backup. Just for backup, or immediately if I have simultaneously another trade to execute. Simple. So I have so much backup remaining. This has to be very clear. The options which I take is weekly options. Okay. Weekly options. I'm not using monthly options. This is just weekly options. Done. So I have 5 lots assigned here. Now what happens is, I will put it on auto run 15 minutes until end of the day. Here I'm putting it auto run. Time is 9:39. You can see we already know the result. Market went one way trending, and you can simply leave it. Okay, in such cases, this is 1700 profit, 1200 profit, 2600 profit. Let it run throughout the day. Now, question is, what is my stop loss? All right, what is my stop loss here? Simple rule which I told you earlier. First kind of stop loss is your candle high low. Let me go here. 1 second. Yeah. So candle high low is nothing but, suppose it's a bear candle, your high of the candle is one kind of SL, high low bar. So there are two kinds of SLs here, very simple. First one is based on loss threshold, where you put a fixed rate. This is my loss per trade, like 1500, 2000, and that is one fixed rate. And the second kind of SL is nothing but your high low candle. If any candle crosses above your high low level, you can trigger an alert. You can set the alert. How to set alerts, I'll teach you how all that. You can set the alert. It is fully compatible with the algo also. I'll teach you how to exit a trade if your high low level is triggered. Okay, so this candle high low, if it's triggered, this is another type of SL. So this SL is based on high low level. First SL is based on loss threshold. So for example, I'll just give you an example. Anytime my trade hits 1500 rupees or 2000 rupees, this is just an example. Okay, minus 2000 or minus 1500, I will blindly exit. Why two kinds of, why not only single amount? Why two different amounts? Because during low VIX environment, I prefer 1500. During high VIX environment, when the VIX is high, above, 12, 14, 16, like that, I prefer 2000. This should be very clear. Nothing complicated here. This is based on loss threshold. Now, same thing if I apply your candle here, candle closing basis. This, you will not have a fixed stop loss. Some days it will hit 3000 stop loss. Some days it will hit 2000. Some days it will hit 50 rupees stop loss. This is because the length of this candle varies. Simple. Because if this is a big candle and I'm holding 5 lots already, my SL will be a little bit bigger. Simple. So you can choose any one based on your own temperament. Everyone has their own different choices, comfort level. I'll tell you how. Sometimes this SL will hit, but this will not. Sometimes your high low level will not hit, but your SL of this will hit on the same exact candle. I'll teach you all that. I'll show you examples. So far, it should be clear how you select the SL. So for in this example, if I had just left this trade on the target wise, there's no limit to the target. Everyone has their own choice of target. There is no specific target limit. Here in this case, end of the day, this simple trade converted into a 10,000 rupee day profit. It's very good, and that's nearly 4% per day. This is actually very, very good. Sometimes even your swing setups, your positional setups won't generate that much money per week, but this intraday generated because we had a very good setup. Now, same thing here. This two examples will take. All right. So here in this case, what happened was, you can see this is a bear signal, agro bear signal. So this is on your 12:19 on 10th of March. So 12:19 means 4 minutes later, 12:23. Let me go to 10th of March, 12 p.m. and 23 minutes. I have entered what is the at the money price here, nearly 24,150. Okay, so 200 points away. Same thing, 1, 2, 3, 4. This is your expiry day. Okay, 1, 2, 3, 4. So this is expiry day, not expiry day, nothing different. I am following my same rules. 5 lots, 5 lots, 200 points away. So from here, 200 points away, call option short. Then 400 points away, from the start, 400 points away. Your buy, call option buy. This is short. Why? Because this will create a spread. That's all. I don't care if it's Monday, Tuesday, Wednesday, Thursday, Friday, whatever day it is. Setup comes. This is how I'm executing. Simple. My SL is defined. Now let's talk about SL first. We'll do both the SLs in this case. We'll take SL. We know both the SL is going to hit, but we'll see the difference in SL. Okay. Here, very simple. I'll take the SL based on first your 1500 rupees. 1500 rupees will keep as loss threshold and we will execute that. So let me just forward 5 minutes. You can just focus here. You focus here and see if market hits the SL 339.89. Okay, done. Let me go back 1 minute. Okay, so in this between 1254 and 1255, the SL jumped from 1500, from 800 to 1900. Okay, it jumped. So I have no choice. My SL limit has hit. I am exiting the trade. Done. That is your SL per day. That's it. Finished. There's no two thoughts about it. What if market will do this? No. Rule is set. Process is fixed. Simple. That is one method. Now the next method is you wait for a candle to close above this. You wait for the candle to close above it. So let us see which candle closes above it. Okay, this candle closes above it. This candle closes at 1247. So that is 1251. 47 plus 4 minutes, 1251. So let me go back. 1251. Here at this moment of time, when that SL was triggered based on high low level, my SL would be only 800 rupees. Okay, so like I told you earlier, when you use the high low level, there is no fixed SL. Simple. There is no fixed SL. It can be less, it can be high based on the range of the candle. Now last example which I want to talk about, very very important example. When you get a setup, you know that there are three outcomes basically. Market gives a signal, it reverses. Suppose you have a long signal, market goes up, it reverses, hits your SL. Okay, done. You know that market will continue to trend, it will not hit your SL, you will get good money. Simple. Then there's the other option where market gives you a signal and then the market goes completely sideways for a long time. In that case, what do you do? In this case, it's very simple. Follow the process. In the process, there are two types of SLs. We're talking about stop losses here. Very clear. So here, this is your first candle on your 6th of March, 9:15 a.m. Okay, let me go to 9:15 a.m. 6th of March, 9:15 a.m. We can't select 9:15 because 4 minutes chart, 4 minutes later, 9:19, right? Done. Selected 9:19. This is level of 24,606. 200 points away, 24,600 is 24,800 short. Then 400 points away is 25,000 buy. Simple. Same credit spread, no change in the strategy. What is the thought process again? Signal comes, I have to apply my rules, I have to apply my strategy, I still have to apply my stop loss. Simple. Now here what we're going to do is we're going to apply the same process. We will start with 1500 stop loss and then we will check what is the stop loss for high and low. Simple. Here, very simple. Let's forward it by 5 minutes. Okay. In the first 5 minutes itself, market has hit the SL. Market has hit the SL for 1500 rupees. Those who used loss threshold, market has immediately hit your SL. Okay. If you look at the chart here, immediately from this bear candle, you had a immediate green spike, immediate reversal. So what happens here? Market went for a small pullback after the sharp fall. In this pullback, next 5 minutes itself, your 1500 points SL is triggered. Done. You have no other option. You have booked 1500 points for the day, finished. But what if you used your high-low level as the SL? What if you used high-low level as the SL? It's very clear to you that market went sideways. It never hit this SL. It never hit this SL. So let us see towards the end of the day market, what it does is fast fall, right? Let us see how the M2M fluctuations happen. So what I'm going to do is I'm going to increase auto run. I'm going to till the end of the day. Right. So what you want to do is focus on the fluctuations here. 3,500, 1,300. So again, 1,300. See how it is fluctuating. Your M2M is fluctuating. Right now we are near 12 o'clock, 12:30, 12:45, 1 o'clock, 2 o'clock, right? Market was sideways entire day. Suddenly it starts to fall. And we are already in bearish position. 1,700 profit, 5,300 profit, 5,600 profit, 6,500 profit. The last fall which came was here. So in first case, if you had used 1,500 points SL, what happened? Market took your SL for the day. You are 1,500 points down. Sorry, 1,500 SL. That is your SL is hit. Simple. But if you use this in this case, your M2M fluctuated to minus 3,000 also. M2M fluctuated. So this is a difference in personality type. There is no right and wrong. You see, the previous example, you had 800 points SL and 1,500 points SL. This case, your aggro bear high low level SL did not trigger. You ended the day till here you were minus 500, 400, 200 sideways market. And then in the last fall, it was nearly 6,000 plus profit. Simple. So this kind of logic which I'm trying to tell you is there is a difference between using high low level as stop loss and using a fixed stop loss. This is a personality difference. There is no method difference here. This is a personality difference. It changes from every person to person. In your 1 month trial period, you have to do testing for both to understand what is your personality which suits you better. Simple. Do all the testing possible. Go back in history, do back testing, do forward testing, create the algo. I'll teach you how to create the algo in the guide videos. So don't worry about that. Very simple 5 minutes process. All right. So far you have learned why do we need the PTM indicator, what it does, how do we bypass the signal, how do we bypass market structure, what is the thought process, and most importantly, the business model you're going to apply. I'll repeat the business model part again. This has to be very, very clear. And before you ask me for a demo, how do you get the indicator? I'll tell you. Before that, I want to tell you something very important. This indicator is very limited. All right. I'll tell you the reason. It's because the more people use it, it will not work. Simple. It's just like a strategy which is in public where everyone thinks it's so. The main funda is the more public focuses on one concept, one indicator, or one tool, that will stop working. That is how market behaves. It has always behaved like that for generations. So right now this indicator is only available for a handful of limited people, those who want to take subscription. Demo is available for anyone who wants to learn. No issues with that. Subscription is very limited. All right. So demo date is on 28th of any month, 28 of any month. So on that day, not before, not after, on that day, ping me on WhatsApp. The contact details are there in the description box. Ping me, tell me your name, tell me your trading view ID. I'll just send you a form, fill the form up and let me know. Then you will get the access for both positional and your swing. Positional and the intraday. Watch all the guide videos properly, create and practice for 1 month. So 28 to the next month, 28 is your trial period. Then how do you get access for the paid subscription? Is very simple. Paid subscription is monthly. It starts from the 8th of any month, 08 date of any month to the next month 08. You can choose multiple months, that is up to you. Whatever discount is available that time, you can choose that price and select whatever month you want, how many months ever you want. Simple. So before 8th I will not take entries, after 8 I will not take entries. It happens only on the 8th and it is limited. So ping me on 8th, ask me if there are free available entries, and then I will tell you yes or no. If a yes, then you can proceed. Or if no, then you have to wait for another month. There's no option. So before that, keep in mind you have to complete your demo. Without completing your demo, I will not give you paid subscription. Simple. That's all. Now, mature traders, keep this in mind. This indicator is for you, those who are focused on building a system that can last for a long time, those who want a rule based system, those who want to create wealth from trading using a rule. Now, when I'm going to say, I'm going to tell you one statement. If you understand this statement, then this indicator is for you, or else you are not yet ready. The statement is, process is greater than your profit. The process of trading, the market structure, everything, entire management of that is greater than the value of that process is greater than your profit. Profit is just a byproduct. If you don't understand this one statement, that means you're not yet mature in trading. Market will humble you and it will teach you this the hard way. The faster you learn, the better. There's no harm in learning this indicator. You have 1 month free to use your demo. You can trial. Again, there's only one chance you will get for demo, so make sure your calendar is free before you ask for a demo. In the next video, what we'll do is we will use alerts. We will learn something more about alerts. How do you set alerts on each and every signal? How do you set alerts on each and every level, high, low level? All right. And then we will move on to build a simple algo. How do you connect algo with your trading view indicator? You can apply the same concept for any indicator, but I'll teach you for PTM indicator only. How do you forward test? How do you back test? What is the idea behind creating a strategy? We will talk about all that in the next part. I'll see you there.